Hi all, welcome back to Invesfinc. After Friday's action based on the military conflicts between Israel and Iran, the big question is what's next for Monday, June 16th? Well, we are about to unlock the key support and resistance zones for the major indices that could hold the answers. And there's a crucial second half to this story, where we have done a deep dive onto the stocks that made headlines on Friday. So stick with us to the very end for our exclusive analysis on whether their momentum can continue and how you might approach them on Monday. Before we jump onto the details, please go through the disclaimer. Now let's begin with the analysis on indices. First up, Nifty 50. Now on Friday, we saw there was a big drop on Nifty. So we opened with 24,473 odd levels, which was the low that it had made on Friday. And from there, we saw a kind of linear upward movement where we had hit the highs of around 24,754 odd levels, recovering almost 275 odd points from the lows. But then ultimately closed at 24,718 points, which was roughly around drop of 0.68% from the Thursday's trading session. Now, if you take a look at the levels, so we started falling from the significant highs of around 25,200 odd levels. So from there until the close, we are at 500 points down. Now we also sharply fell until the crucial zone of around 24,500 odd. Now in the coming days, if you see, we start trading below this zone or the lows of around 24,473 in the coming days, then we might also approach towards 24,000 odd levels in the coming days, which is just 700 points below from this particular level. Now on the higher side, of course, 25,200 acts as a stiff resistance for us. So in the coming days, we might hover in this zone for at least a week's time until there is a clear indication, either the surfacing of the war news or maybe further war getting intensified and continuing for a longer term period. If that happens, then we will start trading in this below channel in the coming week. So the stiff resistance and supports for us are going to be 25,200 on the higher side and 24,450 on the lower side. Now let's see from the perspective of open interest. So on open interest, we see at the higher levels of around 25,000 odd levels, we see roughly 50% of open interest positions got built up. And at further higher levels, if you see, we have been seeing significant writing that has happened from the on the call side. For the immediate support at around 24,500 odd levels, we see some open interest positions got built up even on the put side, which would act or hold as support in the coming days. But if we start trading below 24,500 zone, then we are headed towards 24,000, which we already notified based on the charts. So even the open interest suggests the same thing. So 25,000 remains the stiff resistance in the near term, and then 24,000 would act as a significant support. Though we have intermediate supports at every 100 level below 24,700, even that would act as a support in the coming days. On the PCR front, we stand at 0.7, which is slightly positive. At the money, PCR stands at 0.81, which is bullish. Now let's see from the perspective of Sensex. So even Sensex, we saw a significant drop of around 80,427 odd levels where we had opened with, and we further went down and touched the low of 80,354 odd levels. However, we significantly recovered from those lows and closed at 81,118 points on Friday session. However, still there was a drop of around 573 odd points from the Thursday's trading session. So as you could see, even on Sensex, this remained as a crucial resistance, and then in just two trading sessions odd, we have roughly shaved off around 1,500 odd points. So 82,500 was the zone from where we have been crushed. So overall 1500 points drop we had seen. However, in the intraday we had also seen 2000 points drop, which was quite significant. Now if you see, if we start trading below this particular levels, the box which we have drawn, then we are headed towards 79,000 odd levels in the coming week itself. Now it majorly is based on the geopolitics, how we are expected to see in terms of the war announcements. So as long as there is a kind of consolidation, then we would hover in this zone in the coming week. In case if the war intensifies, then we will start trading in this particular channel in the coming days. So 79,000 would act as a strong support in the coming days in case if we start trading below this channel of around 81,000 odd levels. Now let's see from the perspective of open interest. So open interest signifies that at 81,000 odd levels we have a strong support coming in from the put writers. On the higher side we see the significant call writing only from 82,000 odd levels. So overall we might trade in this particular range in the coming week from 81,000 until 82,000, as long as we do not break either of those support or resistance. However, on the higher side it seems to be difficult, but there are high probabilities that we might close below 81,000 as well, provided if the new sentiments are negative. So if that happens, then we will be open to 80,000 odd levels also in the coming days. So be prepared. If you see significant selling coming in, we can go for the short selling until 80,000 as the first target, or the selling intensifies, then we might also see 79,000 in the coming days itself. So PCR is weak by around 0.6 overall and 0.63 at the money. So this suggests that as long as 81,000 odd levels are held, there is no much worry. Once we start trading below those levels, then we would approach to 80,000 and next 79,000. Then comes to Bank Nifty. So Bank Nifty made a high of around 57,000 odd levels, and then from there in the last 5 trading sessions we have been trading low. So roughly around again 1500 points have been shaved off. So in the intraday, if you see, we almost shaved off around 2000 odd points from the highs. So now the resistance remains at 57,000 again, which we will have to keep a strict stop loss for the shorts. If we start trading below the 55,000 odd mark, which is a round figure and also holds a crucial zone for us, because for almost like 15 odd trading sessions we were above those levels, and if in the coming days if we see Bank Nifty closing below 55,000 levels, then that would act as a negative on the charts, and then that would signal more bearishness or weakness in the overall trend of Bank Nifty. So we might see a good sell-off that can come in the banks, which would make Bank Nifty to trade in this overall new trajectory from 55,000 to 53,000 odd levels. So keep a close watch. Once we drop below 25,000, then we are headed towards 54,000 as well as 53,000 levels in the coming days to weeks. Let's see from the perspective of open interest. So there have been huge resistance, as we could see, at 56,000 odd levels, from where we saw significant sell-off also come in. Now we have good put writing there as well, but since we have already closed or have been trading at the range of 55,500 odd, until and unless we do not move up and trade at 56,000 odd levels for a couple of days, then that should not be considered as a resistance. Then we would act as a support at 56,000 odd levels, and then we would move for the next leg of up move. If we do not see that happening and we are hovering below 56,000 odd levels, then we would see significant sell off again coming in, or getting built at 56,000 odd levels from the call writers, and gradually you will also see the put unwinding happening. So on Friday's trading session we also saw the put unwinding that had happened, and at all the lower levels also, if you see, there have been significant put unwinding. On the higher levels also, if you see 56,500, 57,000 odd levels, whatever put writers who had sold off their positions now have been unwinding those positions and maybe moving towards the lower levels. So as long as you see at the lower levels of around 55,500, 55,000, the call ratings is happening, then that would suggest that there are high probabilities that we are open to move down towards 55,000 and even 54,000 odd levels in the coming days. PCR stands at 0.7, which is slightly bullish, and at the money PCR is 0.88, which is again strong to bullish. So overall, unless we do not cross 56,000 levels, then it is difficult for Bank Nifty to move up. And if we are not approaching 56,000 at all in the coming days, then there are high probabilities that we might open for the further lows below 55,000 once it starts trading below those levels. So keep a close watch on Bank Nifty. Even FINNIFTY have underperformed for last 5 trading sessions. So 27,000 odd levels was the high where FINNIFTY was trading, and from those levels we saw a roughly around 1,000 odd points drop in just 5 odd trading sessions. Now 26,000 remains a crucial support for us. That is when, if you see, we opened gap down, and that was the low for FINNIFTY. From there we moved until 26,400 odd levels, but we were unable to sustain and finally closed at 26,335. So if we sustain above 26,200 odd levels on a decisive note, then there are probabilities that the buying might come in. But if we do not hold 26,200 and start approaching 26,000 odd levels, then there are high probabilities that we might take down these crucial levels in the coming days. So the significant support for us would be the round level of 26,000 odd on FINNIFTY. So once we close below those levels, we are open towards 25,500 odd zone in the coming days. Now on the higher side, 27,000 remains the crucial resistance, and beyond that 27,200, which we touched as the highs. So in the coming week, we are expected to trade in a range bound kind of scenario between 26,200 to 26,600 odd levels. On the lower side, if we start trading below 26,000, then we might open up for the new lows and start trading in this lower channel from 25,500 to 26,000 odd levels. Now let's see from the perspective of open interest. So we have seen a kind of positive biasness at 26,500 odd levels from the call writers. So despite we have closed below 26,500, still there have been open interest additions that had happened from put writers. So this suggests that the put writers are expecting the markets to move higher, and they would act as a significant support at those levels. So once we start trading above 26,500 in the coming days, only then the longs should be taken until 27,000 odd levels for FINNIFTY to move. Else, if we are expected to drift down and open up for the lows until 26,000 in the coming days. So PCR stands at 0.6, which is slightly maybe negative to not so bullish, and at the money PCR is 0.79, which is strong and also bullish. Now comes the crucial part of our discussion, the FII, DII and retail participation. So on the index futures, FIIs have again gone short. They have added 4,000. They have added 4,700 odd levels. Sorry, positions in the open interest, and they stand with 1.04 lakh contracts as shorts in index futures, which is that they are expecting bearishness. On the index options, overall they have went long in call options with 1.65 lakh contracts, and they have hedged that with the put options by taking again 2.11 lakh contracts in long. So net FIIs are still short with 45,912 odd contracts. So their bearishness continues in index options as well as in index futures in the coming week too. Now let's see what proprietary traders are expected. They are mildly short in index futures. In fact, on Friday's trading session, they have added further 8,000 odd contracts in the short positions. So net they have been holding 25,000 shorts in index futures, which is not significant, but still they are negative. On the call options, they have held long positions with 1.25 lakh contracts, and on put options they have hedged by going long with 47,000 odd contracts. So there have been significant additions in the call options that was done on Friday, which led to the overall long positions being carried by proprietary traders in the Friday's trading session. So they are expecting that either we might trade in range bound or might go longs in the coming week. So let's see who is going to be correct with their analysis. Now lastly comes the client. So client or retailers have been very bullish on the index futures, and they have been continuing or adding their long positions in every coming week. So overall now they hold 76,550 odd contracts in index futures on long side. So they are bullish with the trades. On index options, they have significantly shorted the call options with 2.9 lakh contracts. To hedge their positions, they have taken positions in puts and also shorted 2.74 lakh contracts. So net, if we see, there have not been significant positions that are carried by the retailers or clients. So just 16,552 odd contracts they are short overall in the index options. So they are long in index futures, and they have hedged that by index options by going mildly short. Now when it comes to the equity markets, so domestic institution investors have been long and added 3,041 crores in the cash market. However, FIIs have liquidated their positions to the tune of 1,264 crores in the cash market. So FIIs have shorted in equities, have shorted in futures, and then have also shorted in the index options. So they are totally bearish on all the three segments. Proprietary traders, on the other hand, is short in futures, is long in index options. And on client is long in index futures, mildly short in index options, and then domestic institutional investors have been pumping more cash, which is helping the indices to either cover up when there have been significant drop down, or the DIs have been supporting at every crucial zone, which is helping us to not have a big fall despite the FIIs have been selling decisively. Now comes the very important aspect of our discussion, the trending or buzzing stocks. So on Friday's trading session, we saw Manappuram Finance stock continued its strong rally on 13 June Friday, rising with 3.22 odd percent by roughly 8.75 odd points, and it closed at 279.55 odd levels. So looking at the chart, Manappuram Finance have already hit the all-time high of around 279.55 odd levels. The most significant factor boosting this stock was the sharp rise in the price of gold, which has now crossed the landmark level of around 1 lakh per 10 grams. So higher gold prices is highly beneficial for gold loan companies like Manappuram Finance, because it increases the value of the gold collateral they hold against the loans, which reduces the credit risk for them. Furthermore, it allows them to lend higher amounts to the customers for the same quantity of gold, which will surely boost their loan book growth, or in other words, assets under management. The market continued to further cheer once we received the final guidelines on the gold loans issued by the Reserve Bank of India the previous week on June 6th. So particularly RBI had mentioned the increased loan to value ratio for loans up to 2.5 lakhs is a seen as a major growth enabler for companies or the NBFC finance companies. Now adding to that, there was also positive sentiment which reinforced when CRISIL published a report on 13 June which stated that the increase in loan to value ceiling for smaller ticket loans will support the growth of the gold loan companies, and Manappuram is one of the companies which is getting that advantage too. So this fresh validation from a credible source on the day of rally further boosted this investor confidence. So now if you see from exactly 6th June, we have been seeing this rally continued, and there was a significant resistance at around 245 odd levels on Manappuram Finance. Once we crossed that levels decisively, then we started trading in positive trend for almost like 4 to 5 trading sessions on. So the expectation is we are on the higher high lower low kind of trend, and this trend would continue for the coming days as long as the gold prices do not drop or there are significant changes in the policy announcement from the RBI's end. So till then we might continue with the rally on Manappuram Finance, and the new highs can be achieved. So we might cross the levels of around 300 in the coming days, and even 320 to 350. So for us, the significant support would be the same resistance zone what we have put it across, around 245. If you see Manappuram Finance coming and approaching these levels, this would be the right zone to buy, because we might further see the next leg of rally coming in. Now let's see another stock, which is IREDA, Indian Renewable Energy. So IREDA stock had dropped approximately 4.72% on the Friday's trading session, that is on June 13, 2025. So IREDA had recently raised around 2000 crores by allotting roughly around 12.14 crores in new equity shares to the qualified institutional buyers, and the issue price for that was 165.14. Since the price was lower to the market price, that is when we saw a sharp sell off that came in. As you could see at this zone, it hovered towards the highs of around 180 odd, which was the crucial resistance for IREDA. From there, after this announcement, we saw a significant sell off that came in. So 165 is a quite low rate compared to the market price that was running in. So which acted a kind of sell off pressure or a negativity. That is when the stock broke below this level, and there was some likeliness that people who have participated in this QIP had triggered their stop losses, and the traders continued selling. So now it touched the levels of around 165 odd in the intraday, and from there it had recovered. So if you see, the lows have been 162.77. So it was below the issue price of the QIP 165, and then from there we saw some support, and it has now created a doji kind of pattern. So now in Monday's trading session, if you see the stock trading above the highs, that is 170 odd levels, only then we should go long. Else if you see it start trading below 162 odd levels in Monday's trading session, then we are headed towards the further low that is expected to come, and the next support would only be at 155 to 154 odd levels on IRIDA. So overall resistance is around 182 odd levels, and then immediate support would be at 162, and then the next support would be at 156 odd levels. So that's it from our end. If you like today's analysis and it did bring value to you, then don't forget to hit the like button and share it with your fellow traders. You can also subscribe to our channel for the pre-market report updates and also hit the bell icon so that you never miss an episode in future. For the deep analysis on the stocks, you can also join our Telegram channel and also subscribe or follow to our Twitter handle. So thanks again for watching, and we will see you in the next video. Till then, enjoy your weekend.